This is a weekly breaking Forex news update from Horse Forex. For more information, visit our website, www.horsegroup.net. NZD USD pulls back from 2020 high as RBNZ outlines future policy tools. NZD USD pulls back from a fresh yearly high 0.6789 as the Reserve Bank of New Zealand, RBNZ, warns that the economic repercussions from COVID-19 pandemic will be severe and long-lasting, and the exchange rate may face a larger pullback over the coming days as the Relative Strength Index, RSI, flips ahead of overbought territory. NZD USD initiates a series of lower highs and lows after taking out the January high 0.6733 as RBNZ Governor Adrian Orr strikes a dovish outlook for monetary policy, with the central bank head providing an overview of the additional tools that we are considering using as a package in the near future. Governor Orr states that the instruments include various forms of negative wholesale interest rates, further quantitative easing, using large-scale purchases of domestic and foreign assets, direct lending to banks, and forward guidance. S&P 500 sinks. Biden leads Trump. China releases new chip sector plans. With 61 days to go until the presidential election, Biden continues to lead Trump, albeit at a modestly smaller margin, heading into the first presidential debate on September 29th. Numerous polling agencies are showing varying degrees of difference, though the spread below is roughly in line with the 8-point average found in Real Clear Politics data. While the presidential debate is the biggest near-term election event to watch for, recent geopolitical developments between the U.S. and China signal another headwind a new administration will have to sail against. On Thursday, Beijing announced plans to add a provision to the country's 14th five-year plan for boosting the domestic production of third-generation semiconductors through 2025. FTSE 100 forecast. Technical break opens door for further losses. The FTSE 100 was on pace for a relatively calm Thursday session until it joined the NASDAQ 100 and other U.S. indices in their declines. As selling pressure took hold of the major markets. While the technology sector seemed to be the root of the declines, the FTSE 100 was not immune to the shift in risk appetite. Further still, the FTSE 100 suffered an arguably worse outcome from a technical perspective. To that end, losses saw the index experience a key technical break beneath support that had helped keep the FTSE afloat since late May. Residing near the 5,890, the level suffered a brief breach earlier this week, but the final blow was dealt in Thursday's rout. U.S. dollar drives higher ahead of NFP report as volatility spikes. USD CAD initiates a series of higher highs and lows as the FOMC molds an outcome-based approach versus a calendar-based forward guidance for monetary policy, and the lack of momentum to test the January low 1.2957 may generate a larger rebound, even though the central bank appears to be in no rush to scale back its emergency tools. However, it seems as though Chairman Jerome Powell and company will stick to the same script as the next interest rate decision on September 16th as the central bank extends the lending facilities through the end of the year.